Hello everyone, my name is Adam Livingston. I am the Bitcoin Wizard. Today we're going to be talking about more Metaplanets because people are a bit angry over this international offering, and I don't think that they should be. Some people are mad because they're retail traders, and yeah, they don't bring $1.4 billion to the table, so yes, they don't get as good of a deal. I just gotta say, get more money. It's almost like if you bring more to the table, you get better terms. It's almost like that's why, when you go to Costco, you get a better deal on stuff when you buy in bulk. So anyway, I know I already did a video on this just the other day, but we're going to be talking about the $1.4 billion raise, kind of through the lens of their preferred issuance that's just about to come out. So right now, Metaplanet's planning on releasing 2 preferred stock instruments based on issuing credit against their Bitcoin stack. So super excited to see how that's going to happen, and this buy really enables them to issue more preferreds. So they just raised about $1.4 billion with 10% of it going to their put underwriting business. But 90% of it, about $1 billion, is going to go to Bitcoin. Now, depending on the Bitcoin price, that is going to end up at about probably 29,527 BTC in their treasury, hopefully around 30,000, but really depends on the price of Bitcoin when they buy in the next few days. So this is why some people are a bit upset because of the way the international offering was priced. It was secured at just above a 1.0 mNAV, which, is hardly increasing Bitcoin exposure for the people who are holding the stock. Obviously, when there's a lot of people that got into this trade when the mNAV was trading at a 4, 5, 6, or 7, they're not going to be as happy seeing the guys with the big money get in at a 1.1, which I understand. You can be upset at the bad timing of your entry. I totally get it. It's happened to me before. I've had bad timings on entries before, but this presentation is really about showing you why in the long term, this is a good thing. You have to keep in mind their total strategic vision, guys. They are creating the perpetual preferred issuance that is made possible by their Bitcoin stack. And when you increase your Bitcoin stack by 50%, you're going to be able to hit the ground running a lot faster. So right now they hold 20,136 BTC. Hopefully they acquire around 9 to 10K. That's going to bring them right to 29.5 maybe. Hopefully 30 just because I like that round number. I also want to just marvel at how fast Metaplanet's executing and how fast they are smashing every single BTC target that they've set. If you don't remember, they have revised their guidance multiple times and now they're going to get past 30,000 Bitcoin, by the end of this month likely, which if you remember, that was the end of year goal. So things are going quite well. So I want to go over some of the advantages of the preferred share offerings because I think people are just totally underselling this long-term opportunity. I think these products are going to be incredible in Japan. Remember, if you're a Japanese citizen sitting with money in your checking account or you have a Japanese government bond paying you 1.5%, a 6% yield sounds fantastic. So as a Metaplanet investor, what I want Metaplanet to do is to buy as much Bitcoin as possible, accumulate as much as possible, so you can then issue these instruments as much as you possibly can. I want you to leverage up the balance sheet because right now they're super under leveraged. And hopefully through these instruments, they'll be able to do that. But to do that, you need Bitcoin. So to give you an idea of why we want leverage on the balance sheet right now is because their current BTC rating is 76.32, which is the amount of times that Metaplanet's Bitcoin treasury covers their outstanding debt. So right now, when you have, $2.3 billion worth of Bitcoin, and you only have $30 million of debt outstanding, there's clearly room for preferred share issuance. This is what we want. So we should be wanting them to buy as much Bitcoin as they can. Obviously, with this buy, you see less BTC yield, yes, but remember, Bitcoin is a scarce asset. We are in a race to accumulate. And the reason why is because there is a massive spread between the Bitcoin compound annual growth rate and the coupon that you'll be paying, which is creating that enormous arbitrage opportunity for also just the common equity holders because the value is going to accrue to you. On top of that, all of the capital raised from the preferred instruments, guess what? It's non-dilutive because you're not diluting the common stock. You're issuing debt, and then you get money, you buy Bitcoin, and that value accrues to the common. With this buy, they're putting in place the foundation you need to issue more debt. And we're going to get into some math, some calculations just to see how powerful this is going to be long term, but they're using conservative leverage. Metaplanet has issued the guidance that they're not going to issue any more debt that goes beyond 25% of the value of their Bitcoin on the balance sheet. I wish they would go higher. I really do. But you know what? That's fine. We can wait. 25 is going going to be great. Every calculation that I've done is based on them not being able to issue past that 25% limit that they've set. So this is the 10-year treasury projections just based on the Bitcoin that they have, even at the 30% compound annual growth rate, the bit more of the bearish scenario. You'll see that it comes out to just under $46 billion in treasury value by year 10. A 40% CAGR over the next decade, which, is a bit more bullish, but remember, I think bit about like a 58% over the last decade. We'll see. I like to have some bullish numbers. The value of the Bitcoin today in 10 years with that 40% CAGR looks like they'd be right over $80 billion in net asset value. And then the super giga bullish, the 45% number, that gets you $113 billion. So that means between the 30% CAGR and the 45% CAGR, that's representing a 42x to a 105x return on that investment, getting on top of the Bitcoin stack that they already have. So I went ahead and calculated kind of a preferred issuance timeline. This is potential possibilities. Remember, using that 25% limit. So year 0, we're setting the foundation. Let's say the treasury is $3.4 billion. That means the max that they could issue of preferreds would be just under $1 billion. Maybe think a realistic first tranche of this debt would be issued at $0.5 billion with a $30 million cost in the dividends. And then with year 5 and 10, obviously you see as you get into the decade, the treasury is going to grow into the multi billions, depending on the CAGR, of course. And then the preferred capacity issuance is only going to increase from there. This is the graph of the Bitcoin treasury value. Remember, assuming that they never buy a Bitcoin again. Between the different CAGR results, you see a $46 billion treasury, an $81 billion treasury, and then this blue line right here is the 45% CAGR that gets you to north of $100 billion. Which would then mean that the maximum capacity that they can issue the preferred instruments comes to a cap of $11.5 billion in that original 30% CAGR scenario, $20 billion and $28 billion across the 3 scenarios. So that means, assuming they don't buy any more Bitcoin and we just let Bitcoin appreciate this much, by year 10, they could still issue $28 billion of preferreds, which is wild to think about. That's just crazy because that's 10 times the value of their Bitcoin now. Remember, this is based off that 25% limit. What if in 10 years they decide, we want to do 50% leverage? What if they could literally issue $60 billion worth? And all of that just gets funneled into more Bitcoin, this is when my mind kind of starts to explode a little bit. So this is the analysis between the arbitrage spread of the 3 kind of scenarios here. This is between those 3 scenarios, but with the conservative scenario of the 30% CAGR, that means that you're getting about a $3 billion of annual arbitrage spread accruing to the common equity holders by year 10. So that value annually, $3 billion, is going to accrue to you, the common stock shareholder, totally agnostic of what multiple the stock is trading at. And this is why I don't want people to get lost in the sauce here, because they're freaking out about these short seller attacks because Metaplanet kind of telegraphed this raise. But getting the Bitcoin is the foundational thing that is the win. So yes, there's an opportunity cost holding a stock while something goes down, while something goes up. But my thesis is this is an incredible long-term investment. But remember, this is not financial advice. This is financial entertainment. And under the moderate scenario, which I see is totally possible, that means the common equity shareholders are going to get between $7.2 to $7.3 billion in value because of this accelerated Bitcoin appreciation. And then when you talk about that aggressive scenario, that's when it just gets crazy, 13 to 14 billion in annual arbitrage. Now, I know that seems crazy. That number's kind of ridiculous. I'm just saying the math is the math. Bitcoin is the greatest apex asset that you want to build your company on. Remember, strategy's only 5 years old. We can see what Metaplanet can do in 10 years. And when you have all of this value just going down to the common shareholder, you know what you can do? You can probably dilute the common shareholder in an accretive manner to buy more Bitcoin. This raise is letting Metaplanet lay the bricks down for this strategy. This is the final flywheel. That strategy already has, but we're getting it to the market so much sooner than they did. Remember, Metaplanet's only, a year and 5 months into their treasury strategy. This is tremendously exciting. And then this is the graph of the preferred arbitrage spread between the 3 scenarios, the BTC appreciation minus what they're paying for the yield. And then you also have to remember that there's no drama if they have to sell the common equity to pay the dividends, because right now they're going to be allocating even more money to their put underwriting business, which is nice to have that income stream to be able to fund these coupons from the get-go. And for those of you who don't know, their Bitcoin income generation revenues have been skyrocketing. Q2 was the best ever by far, and now they're allocating another $120 million or so to it. Super exciting stuff. So do not lose sight of the long-term thesis, because buying this Bitcoin is completing the capital structure superweapon. We have the upside of the Bitcoin appreciation always firmly in our back pocket. You're having the preferreds being stacked on top of that, which are totally mNAV agnostic. Those are permanent levers that you can use to raise capital. You have the income business generating you revenue to maybe even buy new Bitcoin or just fund the dividends with. And now we're going to have a rock solid firm foundation of around 30,000 BTC, which now makes Metaplanet around the fourth largest corporate holder of Bitcoin. So this structure is creating the perpetual financing machine where Bitcoin appreciation funds increasingly larger preferred issuances. Now I want you to remember all those calculations that I did, all those graphs that I showed you, those are only based on them never buying another Bitcoin. That is from the stack that they have right now. So all of you people freaking out over these last couple months, over the last few weeks, whatever it is, you need to chill the hell out. Quite frankly, what's happening is that you are getting shaken out by the institutions. They are driving the price lower and they are getting in at incredible deals. If you want to take part of this capital superweapon, you have to ignore the noise. It's never fun buying at a high mNAV and then watching your investment go down. But remember, you have to return to the thesis. Do you believe in the inevitability of Bitcoin? If you do, in my opinion, you shouldn't be worried. But if you don't, why did you buy the stock in the first place? I'm seeing so many complaints from people saying things like, BTC yield doesn't matter. BTC per share is an arbitrary metric. And these are from people who bought the stock. So why did you buy it in the first place? What was your thesis? Build your own conviction, build your own thesis. This is mine. This is why I feel totally comfortable and I'm not whining at all. But if you don't like it, you can just sell your shares to me. The bottom line is that we have secured a base of scarcity that is now the fourth largest holding, with extreme exponential potential, even assuming never buying another Bitcoin. And this is going to bring between $2.9 billion to $14 billion in an annual spread to the equity holders. So the companies capitalized on the greatest asset and the appreciation of the greatest asset. They're going to have very conservative leverage through these amazing instruments that are giving the Japanese citizens 4x what they would get over a Japanese government bond. And they have the supplemental income generation strategy. So if you don't see how this company can capture massive value in the future, I'm sorry, maybe you're just lost at this point and you probably shouldn't be holding it. I'm a Bitcoin maximalist. I believe that Bitcoin is the future monetary base layer, and so I am very comfortable holding this equity. Thank you so much for watching. My name is Adam Livingston. I am the Bitcoin Wizard. If you like this content, please like the video, subscribe to the channel, and help me spread the orange gospel to the masses. Have a terrific day. Class dismissed.